Okay guys, welcome to today's video. Right, so in continuation of where we stopped yesterday, day 88, we're talking about understanding range bound market, meaning how can we trade effectively or using SMC setup when market is in a range, right? Especially if that range is in a higher time frame. And I got a beautiful pair to give that example with, right? USD JPY, right? Now, of course, market can be in a range, and when market is ranging, right, you hear lots of people say, oh, avoid the market when it's ranging, but there can be scenarios whereby you catch beautiful trades in a range. Now, if you look at this, right, you can identify a clear range here. This is a ranging market, and you see that clearly if I go to, say, the 4 hours time frame. Now, okay, look at that. Okay, so this is the range. If I go back to the daily time frame now, you think this is just a small range because you're looking at it on you're watching a video. But if you look at this is actually a 2 month range. Now look, this range started August 1st, right? And this is where we are seeing the breakout from this range, October. So imagine if this is your favorite pair, and all of a sudden there was a low, a high, a low, a high. Then when market is supposed to create a new low, then a new high, market started ranging. 1st of August, right? August, all through first week, second week, third week, fourth week, all of September, imagine no new swing high, no new swing low. How would you cope? 2 months, right? And this is your favorite pair. This is where what SMC in a range comes in. You know that your previous swing low is this, your previous swing high is this. What is market trying to do? Right? What is the market trying to do? And for ranging for 2 months, then we saw a breakout October. Now market is giving us a new high. Right? So this is where the importance of this lesson is going to be learned. Okay, so if we go back to 4 hours time frame now, you see the range very clearly. So are there opportunities to catch trades inside this range? Yes, and that is what we'll be looking at using what SMC. Okay, so now just using our analysis time frame, which is the 4 hour time frame, because we discovered the range on the daily time frame, right? The range is clearly visible on the daily time frame. But sometimes the range might not be visible on the daily time frame, but it might be visible on 4 hours time frame. You can go to 1 hour time frame to do that analysis. But right now I can still use, because the range was very, very visible on the daily time frame, I can use, right, after a few days, after like the first week, you know that this guy has been ranging. Then what do you now mark? You'll be looking at those points of interest, liquidity, areas where you want to pay your concentration on. Now, the first thing to do, as in we don't know what moves the market has been playing out, right, is to identify a swing low, swing high. Of course, this is where the break of structure happened. Okay, this is where the break of structure happened. So it means market created a new what? It created a 4 hours demand zone right here. Then when the markets created that 4 hours demand zone, there was a break of structure to the upside. Then when market was selling down, market created what? Several points of interest, which we would identify in this video. Number one, first point of interest is the what? 50% imbalance level, right? 50 imbalance, two imbalance market created here. All those guys, all those will be acted as a point of interest. Most of you don't know how to use point of interest, and I think this would be a good example for me to, right, to help you with that. I think we want a space on Twitter space. Someone asks, it gets confused when market creates, say, multiple points of interest. Okay, so maybe there was an impulsive move, and on that impulsive move there's an order block, there's an imbalance, there's a fair value gap, there's a breakout block. The guy is confused, say, which one now do I use? Market can react with all of them at different time. How would you know which point of interest to pick first? Is the point of interest closest or nearest to liquidity? It means if market takes out a liquidity, after taking out a significant liquidity region, what what restriction is market going to get to? That, oh, market will not be greedy again. I've swept liquidity. I get to this restriction level, I'll pull back. Right? So any point of interest you want to take, if the point of interest remains unmitigated, it means market has not tapped into that point of interest before. There's a high chance market would what use that point of interest. Now this would be a good example, right? So now let's mark out all the point of interest. First point of interest is the 50% level of this for our imbalance. So let me mark that 50% level, right? So this is my first 50% level. I've marked that out. Now second point of interest is this other 50% level here, because when the market dumped there was a pullback, boom, continuation. So this is another level. I'm just teaching you guys how to mark that. Okay, that's the second. Then okay, no, just delete this. The third point of interest I want to look at is there's a breaker block here. Market made a pullback, a pump, a TV candle pump, right? This should be an order block that got violated. So I also have a breaker block. I taught you guys how I used to mark it. So this is my third point of interest. Now, and of course this is my fourth point of interest. This is actually the first one. Why is this the first one? This point of interest, which is the demand, created an impulsive move to the upside, created a break of structure. And based on a higher time frame, I've already shown you guys the swing. The structure on a higher time frame is also bullish. Right? If you look at this, all the way from this pair, we have a low, a high, a low, a high. So you can see it's bullish, right? And markets, there's a key level market is rejecting from here. Market taps into this key level, we saw a move, a tap, we saw a move, tap, and market is, you can see the trend line, bullish, right? Okay, so that's one thing to note that can help you. Then you are seeing all those moves. So what do you look out for? Now, all these are areas of concentration of interest for you. Now this demand zone is also an area of interest, because why? If market should pull back into this demand, you may want to see a continuation to the upside, right? Of course this demand will not be a continuation, because of course when you calculate the swing high, this guy here will definitely be liquidity. If you don't want to use that as start buying, you can see how market aggressively takes it out. Okay, so I've explained how to trade these kind of structures. I've explained this several times. And structural liquidity that market takes out. Now let's understand how market reacts from all these points. Say you have not seen all these movements, right? Now let's understand. Now normally, if this structure was to continue in an uptrend just the way it was moving, say we don't know even that this market is in a range, what would happen is that market would tap into your demand for a continuation, and it formed a beautiful SMC setup, which is engineered liquidity right here, right? Then of course you would want to enter a buy right here to target the high, so that market will continue moving. Then all of a sudden market figured your buy and started moving in this manner. You now discover that market has been ranging. So save all this from this region where you caught this setup, right? From this entry region where you got this setup, you now discover that market is in a range, right? You go to your daily time frame and you're waiting, because this took days and you were like, what's happening? You now go to the daily time frame now, so that, oh, this is a range, right? Then once you have identified that, you would now be able to understand the story the market is telling. Then you now be trading inside that range. What does it mean to now trade inside the range? When you have identified the demand levels and all your key levels, you know that market will definitely respect all these levels, and any demand level will be rejected. Any support level, there will be a rejection, especially after sweep, a sweep of liquidity. Now let's look at the story market tell. Now the first reaction happened where? On this pullback. The market engineered here. We saw market rejecting from what? This guy. This first, right? First 4 hours imbalance. What happened? Market rejected from here. That can be a trade entry. Rejected. Why? You can see on that there is a form of liquidity. So on in a range, you'll be seeing both buy and sell setup. The problem is, where do you want to take profit? Inside your range. Inside, not outside. Okay? Now this is a good setup. Sells down, engineered liquidity again, demand zone, buys. Right? Now what happened? Market pulls up all the way. Now a buy setup from here, take profit above this region. What did the market do? Bought from here, move all the way here, a good buy setup. Right? Now look at this. Created a form of engineered liquidity again. It did not tap into the breaker block. You see what market did? Now you got a good buy setup. Then all of a sudden the market tapped into the breaker. The breaker block. You see all the point of interest, market is using them. All the point of interest, market is using them. The only difference is market was not using the point of interest to shift the structure. Why? Because market was in a ranging period, 2 months, but all the point of interest marked. Right? Normally this first point of interest would have shifted structure if market was in an uptrend, would have rejected and broke all these guys. But since market is ranging, market was respecting every point of interest. Now I marked 1, 2, 3, 4. Market respected this, push it down, buy, take profit here, right? Induce, came back down, got another beautiful setup here. Now this is the first setup, right? This was the first buy. Now look at what market did. 3 candle movement, 1, 2, 3, fair value gap, inducement. After taking profit on the first place, market came, created another buy setup here, SMC. What happened? This was a good buy. It's not a clean setup. We are inside the range. Now what happened? A good buy from here all the way. Take profit would be above this guy. Now this guy is now acting as a liquidity for the breaker block. This your previous high that you're buying market from, right? You buy again, take profit above here. This guy is now where you are taking profit from, is serving as a liquidity nearest to the point of interest, which is what? The breaker block. Now market sold from the breaker block. You can see now we have used 1, 2. Okay, all the imbalance. Now this is the breaker, this is another imbalance. What happened? Market sold. Then look at how when the market sold, it sold all the way. Breaker block strong. It went and swept the liquidity, all the liquidity of the other block, the 2 buys. So all the people holding buy setups here without taking profit on these highs, they have been stopped out. What happened? Market pulled up after sweeping liquidity. You saw this aggressive move, pulled up. Look at the last point of interest, 50% of the 4 hours imbalance that we caught here. What happened? When market was pulling up from this guy, there was also a reaction that pushed market down. But because market has swept all the liquidity of these lows, right? Market has taken out the lower side of this range, right? Immediately market took out the lower side of the range. Market took out the upper part of the range. You have been selling from here, 1 sell. People sold here, 2 sell. People sold here, 3 sell. 1 buy, 2 buys, right? Market took out the low, went and took out all the highs, reacted from here, giving you a clean buy continuation setup here. This was the setup that now took structure out, took market out. Why? All other sell side point of interest now has been mitigated. Everything has been oh god, everything has been mitigated, and market reacted to all of them, right? This sold market all the way. Liquidity here, take profit, buy setup from this 4 hours imbalance here. You can see how market mitigated the midpoint. It's going to be a sniper entry after market took out what the liquidity here, right? There's no buy setup here on these regions. There's no clear buy setup, so nothing you are buying. The market sold from this breaker, so your setup would be sell from here. When it's coming to this demand zone, you are taking profit, so your take profit will be around here. Then this reaction, market pulled up and aggressively came back down. You are already out of the market, you are not buying because there's no good buy setup. Market took out liquidity, went aggressive to the upside, took out liquidity to the upside, broke structure, right? After taking these demands that created the first break of structure, market took it out with a rejection, and you're seeing a break of structure here. Okay, on this sell break structure, tapped into the sell side, but creating a 4 hours demand zone here. Market bought again and took out the range. So if you go back to the daily time frame where you see those range, you see how market reacted on the daily time frame. So all those things we were trading were noise. See the noise, right? See all the noise. Then look at the move. When market took out that liquidity here, then you saw market aggressively pumping, creating a form of, on the daily time frame now you're seeing this movement as a structural what liquidity. It tapped into that 4 hours mid-level imbalance we saw, came back down to the demand zone and broke out of this range. So this is how you read market and understand the story. Every manipulative move is beautiful here on this particular range, but can you study it? Can you be able to see it and follow? Right? That is why it's very important to mark point of interest. So you're marking one. The point of interest nearest to liquidity is the one market will react to first. And look at how market respected all the point of interest. We started with marking out 1, 2, 3, 4. Market respected the first one. Liquidity close to it, it reacted off it. Liquidity close to it, it reacted off it. Went to the second one, which is the breaker block, created an inducement, came back, reacted, sold. Right? The only reason why you're not seeing shift in structure is because market is in a range, but market was respecting all this inside that range, right? Till there was a pull up, it still created beautiful SMC setup for you, even the breakout of the range. Of course, if I wanted to trade this, enter from here, take profit above this high, and I'm out, right? What am I targeting again? Take profit above this level, a buy from here, stop loss below, take profit above this level. Now this is how you read markets, this is how you study, understanding the story. If market were to continue that range, we would still be catching the moves, right? Beautiful. So all points of interest based on liquidity were respected. Market reacted off. You must not expect market to react from a particular point of view and just start going to the end of the world, right? As long as market has reacted from here, it pulled, change direction. This is a good opportunity for a trade, right? This buy setup here was also a good opportunity for a trade. Realistic target, right? Look at, this was a beautiful buy setup. 3 candle movement, FVG, order block, inducement, take entry, boom, right? It even gave a confirmation trade. If you wanted to go to lower time frame, you're still seeing this move also. This would have been a move. If I go to 15 minutes time frame, this would have been an SMC continuation setup, confirmation setup, right? So guys, I don't want this video to be too long, so let's wrap it up before time. Okay, that'll be all for today. Practice, practice, study, study, and you will get it.